Your net worth to the world is usually determined by what remains after your bad habits are subtracted from your good ones, Benjamin Franklin. And one of your good habits is the fact that you are joining us today, and I pray you do it every single day, 10 to 15 minutes. Your persistence, your dedication, day after day, week after week, month after month, 10 to 15 minutes is going to pay off for you. Don't worry about how long it takes. Once you're able to chart the markets, the world is your oyster, my friends. You will make up for the time that you put in. But if you do it haphazardly, if you try to do it once a week, I'm going to spend 3 hours every Sunday, doesn't matter. That ain't going to work for you. It isn't going to work. Every single day, just a few minutes, this will come to you. Be patient. Stick with it. It will work. Now, let's jump into these charts. We see everything down for the day but bonds. Bitcoin down hard. Ethereum, Grayscale Ethereum down almost 10%. Stocks, S&P 500 down 0.5%. Nasdaq 100 down 8%, a little more. Let's look at the charts. Look at that huge red down candle. What we see that's sitting so pretty, though, is our weekly vertical crossover and our 2-day recross that got us into this hammered down, and it has been wonderful. Those of you who have been doing your practice trades, either if you're a Patreon supporter and, of course, took our course on Options Made Simple, the Charting Wealth Way, you may have been into put options, practice trading, or you can also look at something like SH, which is the short of the S&P 500. Again, with derivatives, it moves up in the opposite direction when the S&P is going down. We've got a great training on inverse funds. For those of you who are new, I'll put that at the end of today's video just so you can learn a little more about that world. So stay tuned. You'll see it on the end screen at the end of today's video. But let's jump into what's happening. We got a hockey stick there of the price percent oscillator, derivative oscillator jamming down today. We again can see where it continues to move down, price well below that 2-day trend line. Now, this is the Wednesday, Thursday candle. It is a slowdown in the down movement, hasn't hit the low that it hit before. Price percent oscillator nonetheless still dropping off hard, derivative oscillator heading down. So again, nothing seems to be slowing this down much. And the economic news still waiting for some good stuff. Of course, if the Fed backs off on some of its language and just keeps pumping money into the markets, then this can just keep going and going. But right now, lots and lots of downward pressure. Look at the half day. You can see again where we had a sideways slide. We had up movement in the afternoon, just a little bit on Tuesday, popping up on Wednesday morning, then sort of petering off and dying on Thursday afternoon. Price percent oscillator a little less than negative. Derivative oscillator about flat, positive there. But again, lots and lots of downward pressure. Your 2-day recross has done quite well for you. Now, let's go from there to the Qs, the Nasdaq 100 tech stocks. Again, big red down candle, price percent oscillator, derivative oscillator heading down on the weekly 2-day. Again, a slowdown in the down movement. Haven't reached that prior low for the Monday, Tuesday candle, but this Wednesday, Thursday still price percent oscillator, derivative oscillator jamming down. Like the S&P, you can see where things really bumped up there on Wednesday morning. Then the afternoon started dying and dying more on Thursday in the morning and accelerating in the afternoon. Let's move from stocks to bonds, up 1.84%. I mean, I'm telling you, let's go on the weekly first. We had that weekly vertical crossover going down, and bonds went down strong for 2 weeks. What are they doing right now? Well, we have a solid green spinning top, lots of movement on the bottom, some movement on the top. Price percent oscillator's lost a little bit of its downward energy. Derivative oscillator still heading down strong. As we tune in a little deeper to particularly these, well, we can see where we had that hammer stroke down ending. That was the Monday, let's see, the Tuesday, Wednesday, the 18th and 19th of January is where we had the last super strong down movement. Then things tried to recover for 4 days. And then these last 2 days, again, we can see where even with today's up movement, where the candle is directing us is a slowdown in that continued down movement. That's what that long wick on the bottom and that wick on top shows us, and that solid red down candle being very sparse. Still negative on the derivative oscillator, just barely. Price percent oscillator negative, had been going down, trying to move up based upon that movement for the day. We look at this half-day chart and we saw where things were getting so close with 2.5 days of down movement to crossing over, going down, and then popping up on Thursday and pushing through that weekly trend line. Looked like it was just going to roll over on that half-day chart through the 2-day, stay below the weekly, and it just wouldn't do it. So we'll just continue to watch, wait and see as bonds continue to fluctuate a little bit, but still lots of downward pressure on both the weekly and the 2-day. 2-day a little weaker, but that weekly still pushing hard down. What about gold? Well, as we look at gold, again, we had the weekly vertical crossover way back on early November. 2 weeks of nice strong up movement. Gold did me so righteous. 3 weeks. 2 weeks of really strong up movement. But we did have 3 weeks over that course before it rolled over. I did a wonderful trade in there. Then gold pulled over, hammered down for 3 weeks. And since then, it's been trying to build up, but you can see how the candles will gain a little energy, then burn off, gain a little energy, then burn off. That price percent oscillator's heading down now. Derivative oscillator's about flat, maybe a little less than flat for the week. 2-day, with this latest 2-day red down candle really hammering down. It's blown through the 2-day trend line. Derivative oscillator positive, price percent oscillator barely positive. A strong downstroke on that price percent oscillator, getting close to the red signal line. We'll get a better idea as to what happens on Friday, where gold is a-going, but it has blown through that 2-day trend line and has penetrated the weekly and staying right above that weekly. We'll see how it goes. We look at the half day and we can see 2 strong days of down movement in gold as the derivative oscillator accelerates down, price percent oscillator heading down too. So we'll see how gold finishes this week out. Will it save itself, or will that 2-day take it on through? We'll see how that continues to develop. And some of you might ask, wait a minute, why is gold going down, bonds going up, stocks really getting hammered? And then when we look at the crypto space, why is it getting so hammered? Some of this could be deleveraging, people making, covering, trying to cover positions, margin calls and such. Could also be when it comes to bonds. I mean, the way it sort of rebounded for the day, but there's still lots of downward pressure there. Could be some people, again, attempting to jump into a safer haven. But again, when you have unwinding, market-wide, systemic, you've got so much money where people are trying to cover losses that it can actually hammer everything down. So that may be what's happening. Let's look at Bitcoin down 3.35%. I've told you guys for weeks now that the crypto market is not a place where I want to be. Why? Because we look at these charts, we see big red down candles, and we see the price percent oscillator heading down. Derivative oscillator's been flat going on about 3 weeks, but still highly negative. Let's look at the 2-day. Again, that prior candle for Monday, Tuesday, very strong negative candle. This latest one, solid green with a wick on the bottom, no wick on top. So again, down movement, a slow down, not as hammering down as that prior 2-day, but still though, lots of downward pressure, derivative oscillator, price percent oscillator. We look at the half day and we see where things had really hammered down through Monday and then sliding sideways, trying to recover a little bit. But again, no crossover yet. Derivative oscillator still negative. And our big charts, 2-day and weekly, super, super weak. That is where we are, folks. As we end the day, hey, 20 weekly vertical crossovers just went out to our Patreon members. Check those out. 19 are down. You shouldn't be surprised. One is up. And next Wednesday, Patreon members, mark your calendar. As always, first Wednesday of every month. This is the February Live question and answer call-in session. Be there with us. If you can't be, then of course we will be sure to record it. We almost always are able to do that unless there's some glitch, and there hasn't been for several years. We will record that for you and get it right out to you. But you can still send in your questions and the charts you'd like us to look at for you, and we'll be happy to try to work that in, and then you can listen later. If you're not a Patreon member, you appreciate what we do here, how about a little bit of reciprocity, a little bit of good karma? We would appreciate it. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.